Welcome back here to FreightWaves Now on this Wednesday morning. I'm Andrew Cox. He is lead economist Anthony Smith. We're here to give you a shipper update. Anthony.
That's right. So we're going to talk to some of the updates that are going to come out later on this week. And one of the ones I'm going to be looking forward to is going to be personal consumption expenditures. What we have here is personal consumption expenditures for durable goods up against our very own van outbound tender volume index. And so when we look at these two put together, not saying that it's a one-to-one movement, but when consumer expenditures of durable goods go up, we are also seeing an increase for volumes as well. And so looking at that, we can see and kind of make some expectations as to what's going to happen within the market or within the segment. Even though we're seeing some edging down in a sense for some personal consumption expenditures, volumes have not really come down at all. And so that's telling me that there is still a lot of backlog. There's still a lot of pull forward because we're hearing all these stories. We're seeing impacts when looking at import data of a lot of pull forward in anticipation for this holiday season. Now, Zach Strickland's favorite index, when we're looking at consumer confidence, came out, and we did see that it hit the lowest point within the last 7 months, but in a historic context, is still at near record highs. So we are seeing that consumer confidence is starting to peel back a little bit, maybe in anticipation of a little bit lighter spending than what we were expecting initially. But I have no doubts that there's going to be a very active holiday season. There's going to be a lot of purchases. I think what we're seeing right now is a lot of volumes moving in anticipation of a lot of those anticipated retail sales and consumer expenditures.
Yeah, I mean, you have to look no further than any of the major retailers and their Q2 and Q3 earnings calls. They were talking about how they felt they were in a better position with inventory than they were this time last year, growing inventories 20%, 30%, 40%, even 55% in the case of Best Buy year over year. So they are building whatever they can. It's just there seems to be gaps in some places, though.
Exactly. And so one of the big areas we're going to look at in our next chart is going to be one of those segments that's going to be really pivotal for consumer expectations or consumer conditions. And so we're looking at weekly initial jobs claims. This is going to be one that's interesting because over the last 2 weeks, it had a tick up. Now, nothing like that's going to be an indication of a spike or anything overt, but it is a little bit concerning when you are seeing historic lows, or not historic lows, pandemic lows week after week, and then you see 2 back-to-back weeks of increases. And so this also comes after the announcement from the Biden administration of vaccine mandates for private businesses with more than 100 employees and federal employees as well. So looking at that, there may be some transitions happening, getting ahead of some of those discussions that have happened or were announced. But really what we're seeing here is that there hasn't been a sudden spike in a sense of initial jobs claims. So seeing this, I think, is a little bit of a relief that it wasn't worse or even higher when we're looking at what was announced not too long ago. So this is going to be one I'm going to be watching closely. As you know, tomorrow gets update every Thursday. So I'm going to be watching this one closely.
Yeah, I think another big point about these jobless claims here is that throughout the kind of this big wave we've had of the Delta variant, they still continue to come down, right? And now we seem to be coming over the peak, at least on the cases side of things, of the Delta variant. So it would hope, right, that could have some impact on initial jobless claims. These companies begin to be a little bit more confident moving forward that they can reopen and be at full capacity. So hopefully that can continue to put some downward pressure on this index.
Exactly. And one of the big things that we're also seeing is companies really peeling back some regulations or really making it more appealing for more people to come work for them. Talking about Amazon just the other day and how I think they're eliminating some certain drug tests in a sense. And so they're going to make the workplace a little bit more feasible, make it more appealing, just to pull more employees into the area. And so this is going to be one we're going to watch closely. We're also seeing initiatives across the board, sign-on bonuses, relocation packages, one-time payments, I heard, of course, we all heard of iPhones, things like that happening. So in our next chart, we're also going to look at what's happening at a macro scale, and that's going to be looking at more so on the import side. And so talking about imports, we're looking at what's happened within the U.S. And the latest import data showed that we hit a record high for our imports data for our next imports to exports. And so showing what we are anticipating that the U.S. is indeed increasing or improving at a faster rate than the rest of the world. And so looking at the US consumer, they're going to keep on consuming, they're going to keep on buying, and unfortunately it's at a higher rate than what we are going to be able to see the rest of the world be able to produce. And so that's going to be another factor that's going to put upward pressure, not just on rates, but on final goods.
Yeah, not only are we pacing faster than the rest of the world, but we have our exporters that are finding it difficult to get their product over to Asia or even to Europe in some cases. So there's a lot of factors at play here that are making that spread between imports and exports even wider than it normally is.
Exactly.
All right. Tony, we'll be back here with another shipper update here in a moment.